All right, let's start off with your testimony from last night. Give us a sense of which you talked to the House about, and what are the perils for American companies in China? Of course, a lot of American companies do business in China. A lot of tech companies do business in China.
Yeah, Frank, the key risk that I focused on was the fact that China has become an information desert. Over the years, obviously, there's been a lot of data censorship, but the real problem now is with rules changing on the ground about what data the companies operating in China can access and cannot access. It's becoming very hard for them to truly understand the actual economic picture there. And I think these matters are made worse typically by the fact that there's a raft of research that gets produced by the investment banks, which also doesn't give an honest look at what's going on in China. I mean, this year alone is a great example of how the street consistently puts out what I would just call very, very bad research, but also dishonest research.
All right, very interesting as we're looking at some of the research coming out. I want to ask you, are we seeing any clear signs that China's regulatory crackdown is coming to an end? I'm going to borrow some Fed talk right now. Are we seeing a pivot when it comes to that crackdown, or is this possibly just a pause?
Well, I would say this is definitely a pause. The rules and regulations in China are evolving, which means that there are potentially more pitfalls ahead and more risks ahead. So it's too early to say that the tech crackdown as a whole is over.
Okay, so if this is a pause, what does this mean in your mind for the short term for a lot of these companies? A lot of different things going on in China. And of course, the U.S. is trying to regulate some of the information and the technology going to China, whether it be through chips or cloud and AI.
Look, I think short term, obviously everybody likes the reprieve. It's great for these companies and their stocks. Long run, the risk, I think, has not gone away. If anything, the geopolitical risk means that there's going to be retaliation coming out of China as well. So investors have to be incredibly cautious and have to become more and more sophisticated in the way they do risk assessment.
So I'm using your words right now. You're saying there's a lot of propaganda out there when it comes to investing in Chinese equities and Chinese companies. What's one's metric? What's one thing that'll give us actually a clear picture that get us past all this propaganda that investors can look to coming up in the future?
Yeah, I think the first thing is that we need to get away from all these exaggerated GDP targets and so forth that we deal with at the beginning of the year. I think investors need to use as much independent data as they possibly can to understand the economic performance of the country and how the various sectors of the country are performing. So that's what I would constantly push to do.